What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Tuesday, February 27th. Well, guys, SPY, or more so the S&P, down today $1.86 a share, SPY that is, down 0.37%. Let's take a look here. Again, we're going to look at this on a number of different time frames and try to pull out as much bias that we got out of the market today, including the options, and get really contextual about areas to watch as we head into tomorrow, starting here on the 1-minute chart. First of all, I cover SPY every single day. If you guys get value out of these videos, please subscribe to the channel. I'm hoping to hit 3K by the end of this trading week. But let's take a look here. First of all, after hours approximately flat here. Again, understand that whether it's up massively, down substantially, or flat, volume in the after hours is going to be very, very low. So always take it with a grain of salt. Regardless, today, approximately flat in the after hours. Just really briefly, what I want to do here on SPY is take a look at any intraday scalping opportunity, because you guys know I'm a scalper. Scalp trading is what I do every single day. So I'm always concerned with trying to generate revenue around what would be a core position and doing so intraday, okay? But I'm not interested in trading anything that doesn't have edge or positive expected value over time, right? And the market itself, or SPY, it's only going to be what I call in play a very small amount of the time. Typically, it's going to be when there's a major catalyst, CPI, a big Fed announcement, FOMC, but honestly, only if the result of FOMC wasn't overwhelmingly expected. Big things like that. Those have been the big things as of late. CPI is a really good example. So then it becomes like, well, okay, so we just can't trade it if it's not in play, which is only like 1% of the time anyway. Well, no. There are, for example, I have one setup in particular, call it the repeat offender, that I'm watching SPY every day. And I very consistently trade that one particular setup on SPY because I have found forward testing through all different market conditions, sideways, horrendous bear markets, tremendous bull markets, right? That one setup, if it sets up properly, has edge really in any stock that's liquid enough. I find it to be most effective in most of the blue chips. And the reason I'm taking you guys through this is so you can know what I'm always watching and what I will be watching come tomorrow. So we saw the early stages of that bounce setup, that repeat offender setup. However, that channel tightened down, and I've found over years of testing this, when this channel tightens down between the 20 EMA and the -2 standard deviation band, and or the regular, or the upside, right, the 2 standard deviation band, it tends to turn the edge from positive to negative. And you can see here that because it adds that psychological barrier, and we push downside through. All right, not uncommon at all. We had the early whisperings of another setup here. Same deal, tightened down too much. So you guys get the idea. I'm always looking to take the third and or fourth bounce or rejection, but only if the channel is wide enough with a wider ratio scalp. That's going to be typically about 65 cents wide. With a tighter ratio scalp, it's typically about 25 cents wide with a clean first 2 or 3 bounces or rejections. All right, now let's move away from the intraday mentality and start taking a look at the day-to-day. Start going through our paces here about pulling out bias from the market and start looking ahead to tomorrow. Now, what are we always looking for here on the 5-minute? Right, this is part of our routine every single day. What are we looking for? We're looking at the volume profile to see, were there any really obvious pops in volume that correlated with big moves in stock price? And if we look at the volume profile, you can see here that, honestly, the answer for the first 90% of the day was not really. Right, you saw, okay, some elevated volume on this downward move here, but the bottoming candle kind of blew that out of the water with the highest volume candle, and that was actually the reversal candle. So that kind of, messes that idea up. But we actually saw pretty substantial volume into the close on a red close. Now, bulls, just understand, it's not uncommon to see this on SPY, but please understand that there's going to be bears, whether you're in a chat room or something, or maybe you're talking with someone in our free Discord. There's going to be bears that look at that and they're like, we won today. That was a really great close. Did you see that massive volume on those red bars into the close? Bulls, just understand the bear's psychology. Now, this is just one factor of many factors, okay? But you're going to start seeing that sentiment around here tonight if you spend enough time online and talking about, the close on the S&P or on SPY, I guess. Let's move on now to the 30-minute chart and get really contextual here. Start taking a look at levels to watch as we move into tomorrow. Of course, we have the self-fulfilling prophecy 50-period and 200-period moving averages pulled up. The most popular available to us, the only ones I'm interested in. So here on the 30-minute bulls, here's what I'm looking at. Priority number 1 tomorrow, get up and reclaim that 50 period. Okay, we were above that briefly during the open today, and we have inevitably gave that up. I want a repeat of kind of what we saw last Friday here. I want to reclaim that, claim it as support, bounce up off that higher up toward the 510 level. Okay, bears, you want to see a downside test ideally as close to that 200 period as possible. It is, approximately 0.47% away, so it's not that big of a move, really in either direction at all. And bears, you want to see a downside break of that 200 period moving average. Bulls, that's what you wouldn't want to see, and bears, you would not want to see a reclaim of that 50 period. All right, let's move on now to the 4 hour and take a look here. You can see that that 50 period currently is just above $500 a share, about 0.88% to the downside. That's great. Bulls, we've gotten up above $500 a share, putting some padding between that psychological level and 500, which is good. Continuing from here, bulls, I'm not sure we'd want to see a retest of that level because that's nearly 1% against the bulls. But ideally here on the 4 hour, a continuation, see how that's curling upside? A continuation moving higher on that 50 period. Or what I mean more so is that 50 period, the white line moving higher would be beautiful. Even if the ETF stayed flat tomorrow here, Tuesday. Just get some psychological barriers up underneath as close to the stock as possible. Bears, you would ideally want to see a downside crack of that 50 period. Now, the most important chart of all, the daily. Okay, if we look at the daily here, the story becomes really obvious. Bulls, 2 things. Any downside test of 500, bounce. Hold 500 by any means necessary. Upside, bulls, 510, crack 510 and hold it as support. That would be a new all-time high if we get above 510.13, of course. But a break above 510 is the ultimate goal in the short term. Break 510, retest it, hold it as support, push higher. On to the next, 515, 520, right? Bears, 2 things. Do not give up 510. And downside, ultimate goal here in the short term for bears, get back into 400s. Break downside through 500 and claim that as resistance. Now, let's take a look here at what was the options bias. The bias from the options traders in the chain here on SPY today. We had 6.78, 6.79 million total contracts traded here. Again, as always, we have plenty of sample size on SPY, lots of volume. Calls, 2.9 million, puts 3.88 million. So actually relatively heavy, this is interesting, a relatively heavy put side bias on the overall call put ratio on SPY here today. But what did the short-term speculators think? Right, what was the sentiment in the very near term? Those short-dated, gambly style short-term bets, the 0 to 20 delta range calls and puts, 846,000 calls on the dot, and 1.56 million puts. And what's actually really interesting here on SPY today, guys, this is incredibly uncommon. Don't shoot the messenger. Okay, but this is uncommon. Every delta range. This is typically to the call side, by the way, on SPY. But every delta range, out of the money, at the money, and in the money, here on SPY today, all of them, the more the short-term sentiment, the mid-term sentiment, and the longer-term sentiment, they were all leaning to the put side here today. That's very, very rare on SPY. We don't see that all that often. Typically, it's to the call side. Okay, but again, this is just one day. All of this data, all of these options were traded today, Monday, right? So it seems that not only are the overall options traders on average, but also the short-term bets being placed. The chain today is leaning to the put side. Okay, now it's not ridiculously overwhelming like 3 times than the call side, but it's substantial. Okay, and I think that's really interesting. I'm interested to see if we see that flip tomorrow when we cover this again. But listen, again, as always, make sure your risk is managed because the options traders can and oftentimes are be wrong, or can be and oftentimes are wrong, right? Listen, if you got value out of this video, please subscribe to the channel. I'm covering SPY every single day, 5 videos a week. If you want to come trade with me in the private group every single day as well, take a look at that first link in the pinned comment. Hope to see you join, and I'll see you in the next one.